welcome to another virtual Lunch and Learn in our series for Strata Council members. We're really happy to have you join us. My name is Catherine Squires-Basson. As you can see, I'm the Director of Culture and Community here at Proline Management. And if you ever have any questions or suggestions about this series of Lunch and Learns or learning opportunities, feel free to reach out to me at any time. Most of the emails come from my email address, so you can just respond to me directly. And I will either be able to answer your questions or pass you along to someone on the team who can help you. We're delighted to bring this information and opportunities to connect with, learn from, and ask questions of different experts in the fields that you interact with. So now I'm going to pass this over to Christy Tamburi. She is a Strata property manager, supervisor, and one of our managing brokers, and she is going to introduce our speaker today.
Amazing. Thank you, Catherine. And thanks for everyone joining us today. Today, we have the opportunity to hear an update on the state of the insurance market for Strata corporations with Melissa Stedman from Gallagher Insurance. So just to give you a couple of highlights of Melissa's background, she's been in the insurance industry for 27 years and was a past president of the Insurance Institute of BC, the Vancouver Island chapter. She's been with Gallagher since 2018. Is a real estate practice leader in BC for Gallagher. In terms of Gallagher itself, Gallagher is a global insurance brokerage and risk management firm established back in 1927. They've had a successful realty program in place in Victoria for over 40 years, which they continue to grow and develop with the changing needs of consumers. Gallagher is the only insurance brokerage to be awarded one of the world's most ethical companies by Ethisphere 13 years in a row, which is pretty incredible. And Melissa is actually a Strata owner and a council member within her own Strata corporation, which is also managed by Proline. So some really neat connections there. Having said that, I'm going to hand it off to Melissa and we'll get started with an update on the state of the market.
Excellent. Thank you, Christy. Well, welcome everyone, and thank you for taking the time to be here today. And your questions at the end, Christy will read those out, and I'll do my best to answer them. Well, let's get started. Oh, I will just in advance apologize if there's any animal noise. I have to work from my home office. I have no video at the regular office, and I've got a cat and a dog that are generally pretty quiet unless I get on the phone or am on video. Then they tend to act up. So let's hope that that they stay nice and quiet for this. So just our agenda today, what we're going to go through, the current state of the residential realty market, what makes a hard market, what is currently influencing it, dreaded earthquake, and how as you, owners and council members, can help ensure that your insurance program remains in place. So much like, sorry, bear with me here, I just need to move that over there. There we go. So much like the law of supply and demand, the insurance market fluctuates. When there's a lot of capacity and insurers are profitable, competition becomes greater and we see rates stabilize or even reduce. And this is known as the soft market. Alternatively, when profitability drops, capacity is reduced and demand escalates, we see rates and underwriting scrutiny increase. So this is where we are now and where we've been for the last couple of years, and this is known as the hard market. So why is this happening? Well, like any other business, insurers are driven by profit. They make money through investment income and underwriting profit. And these earnings ensure that they have the money to pay the claims and remain in operation. So low interest rates combined with continued losses year over year have far exceeded the premiums received, particularly for residential realty. And the result, decreased earnings causing capital deterioration, which in turn reduces the amount of available insurance or capacity in the marketplace. Loss of capacity can be a result of insurers no longer writing in certain territories, no longer writing certain classes of business, or they reduce the amount that they'll offer in certain zones or classes. These actions will drive up rates as the carriers that are willing to continue to put up capacity, they're also increasing their risk. So this means more premium is required. Underwriting scrutiny also increases in an effort to help mitigate the insurer's exposure in the higher risk classes and territories. Globally, hurricanes, earthquakes, wildfires, and flooding have contributed to poor financial results for insurance companies. In Canada, 2021 saw $2.1 billion paid in insured damages. And in 2022, that amount increased to $3.2 billion, making it the third worst year for insured damage in Canadian history. And just for a note of interest, 2016 still ranks as the highest year on record, namely due to the Fort McMurray fire. So in BC, the probability of a catastrophic earthquake is unquestionable. It's not a matter of if, but when the big one will hit. So building codes and materials are constantly being updated in an effort to help a structure withstand the shaking during a seismic event. And it may help new buildings down the road, but it does little to aid existing structures. And in all reality, these codes and materials are intended to aid in life safety. They'll help a building stand a little longer, which will allow people to shelter in place a bit longer and then exit safely. It's not necessarily going to maintain the structural integrity of the building over the long term. Reinsurance companies use modeling to predict when and how severe a quake may be. They then use this information to deploy their capacity and determine rating. Many of you will likely notice that your earthquake deductibles have increased on your Strata policies. So 15%, 20%, even 25% is becoming the norm. And this is where insurers are even still offering the coverage. In personal lines, we've seen several markets no longer offer earthquake coverage on Vancouver Island, while some are limiting their exposure based on postal code. So it is important to note, if you don't carry earthquake on your unit owner's policy, you don't have any coverage for the earthquake deductible loss assessment. Fortunately, we're still able to offer earthquake in commercial lines, albeit with the increased deductibles. Limited options remain for bringing down the amount of the deductible. Earthquake deductible buy-down policies have become increasingly scarce. There are only a couple of markets remaining that offer this coverage, and they have very strict requirements. They're only offering it on lower values, certain age requirements, number of stories, that sort of thing. So we're really not seeing much in the way of earthquake deductible buy-down policies anymore. So the diagram here is just a simplified example of how Strata's earthquake deductible is assessed to each unit. So you have a $20 million building with a 20% earthquake deductible. So that makes the deductible $4 million for the Strata. The $4 million is then assessed to each owner based on the unit entitlements. So for ease of explanation, I'm just showing an equal division. This makes each owner responsible for $100,000 of earthquake deductible. So as I mentioned earlier, if you don't carry coverage for earthquake on your unit, you don't have any coverage for that deductible assessment. Many condo unit owner policies have limited the amount of the earthquake deductible loss assessment to $25,000 or even less. In the example shown here, that would leave the owner on the hook for $75,000 towards the deductible. So there are some personal lines markets that offer earthquake deductible buy-downs. But you have to work with a broker that has access to those markets, because they will write the underlying policy and then they can write the buy down for you. The personal lines buy down options range from $50,000 up to $500,000 limits, and the premiums starting just under $300 all the way up to $6,000. So if you are interested in a buy down for your unit, just ask your broker if they have a market for it. So in a market such as this, it's important to ensure that your insurance program remains in place for the strata. There are some steps that owners can take to help mitigate premium increases and allow your broker to present your building in the most favorable light to the insurers. So of course, loss prevention and mitigation are key. You want to ensure that hot water tanks are replaced prior to their expiry date. If council keeps a record of the tankages and replacement dates, it's great information to share with the carriers. They really, really like that. Replace plastic hoses with steel braided hoses on all appliances and check them regularly to ensure that there's no leaks. Install water leak detection devices with alarms. Consider water treatment systems that help prevent pinhole leaks, such as high-tech water treatment. Perform regular inspections and maintenance on major building components, such as electrical, plumbing, roof, gutters, sprinklers, elevators, all that fun stuff. Follow depreciation report recommendations for upgrades and replacements. Keep an ongoing maintenance log of major repairs, maintenance, inspections that take place throughout the year. This is great information to pass on to the next council, and it's always good to share with your broker so that they can share it with the insurers. If your building has poly B plumbing, replace that poly B. Insurers don't like it. Same with aluminum wiring. If you have aluminum wiring, it's best to replace it. At the very least, make sure it's properly pigtailed. And that should be checked on a minimum 5-year cycle. The pigtailing needs to get tightened and it needs to be regularly inspected. Again, there aren't many insurers that offer insurance where there's aluminum wiring. Have a snow removal contract in place. We're seeing a lot more snow, more so than we ever used to. So those snow removal contracts are important. Ensure that owners and tenants know where the main water shutoffs are and who to contact in the event of a loss. You can utilize loss consultation rather than reporting a claim. So many times claims are reported because you think the damage is going to be significant. And it turns out that maybe it's below the deductible or it's just barely over the deductible, and then you withdraw the claim. But that's still a claim on your insurance history, and there are adjusting expenses that go with it. So insurers still note that there was a loss, even though it was withdrawn. So where your broker offers it, consider a consulting approach instead, where an adjuster is still dispatched just like they are if a claim was reported. They'll investigate and determine the extent of the damages and work with the contractors on remediation. If the damage is below the strata's deductible, the strata is responsible for the adjusting or consultation fees. And these can range anywhere from $300 to $3,500, depending on the extent of the work done. If the damage is over the deductible, the strata now has the option of reporting it as a claim. And if it does get reported as a claim, then all of those fees are rolled into the claim and the strata doesn't have to pay anything. Some insurers will send a loss control representative to visit your premises, and they generally will make recommendations to prevent or mitigate losses from occurring. It's a great little inspection. Most of the common things that we see are removing combustible materials from electrical rooms, that kind of thing. But insurers will send out a recommendation letter and they'll want to see that certain items have been taken care of. So it is important to make sure that those recommendations are followed and in the time provided by the carrier. So increasing the strata's policy deductibles. Sometimes that seems counterintuitive, but if the strata's policy deductibles are increased, it's actually pushing the losses back to the individual unit owners. So you can save some premium and you have less losses on your history. Insurers will generally provide more capacity at better rating for risks that are loss-free and well-maintained. So that's the key there. And as I mentioned on an earlier slide, inflation and building values are top of mind with carriers right now. Having annual appraisal updates not only ensure that you're meeting the Strata Act requirements by insuring to full replacement value, but it gives the carrier peace of mind that the values are adequate, and it can increase your eligibility for policy enhancements such as stated amount coinsurance or the extended replacement cost. In the event of a loss, a well-written bylaw can allow the strata to recoup the policy deductible from the unit owner where the loss originated. While this doesn't prevent a claim from being reported, it does allow the strata to replace the funds in the CRF or the operating account, wherever that deductible was taken from. As a unit owner, it's important that you carry insurance for your contents, your betterments and improvements, your deductible loss assessments, additional living expenses, and personal liability. If you rent your unit out, you should carry a rented condo unit owner's policy. This will again provide coverage for loss of rental income, betterments and improvements, deductible loss assessments. And you should also encourage your tenants to carry a personal liability policy for their own contents, or a tenant's policy, sorry, for their contents, additional living expenses, and liability. And while these policies can't be enforced by law, buildings where owners and tenants carry insurance are considered more favorable from an underwriting perspective. And that pretty much wraps it up. Hopefully I've covered off some key items without leaving you feeling too overwhelmed like this little guy under the question mark. We definitely have time for questions. I think maybe I spoke a little faster than in my my trial, so sorry about that.
Thanks, Melissa. We do have one question for you.
You bet.
Is sea level rising becoming a factor for waterfront properties?
Ooh, good question. Well, definitely. I mean, flood, like earthquake, is mapped by carriers and reinsurance companies. So, you know, the flood mapping is constantly updated, like earthquake maps are updated, and sea levels rising, your flood exposure is going to be greater for those waterfront properties for sure. Awesome. You know what? I feel like I missed an important slide. I think there's something you know what? I think I put my, I put the wrong, I apologize, you guys. I did have a little note about insurance companies and how they're investing in change. So I must have pulled through the wrong presentation without my updated slide. So there are insurance, like all of us in the industry, actively campaign government, and we do take steps to help reduce natural disaster exposures. So this could be in the form of provincial and federal funding for the implementation of flood hazard reduction, mitigating forest fire threats, other climate change actions. And some insurers are actively investing in climate change studies. Intact is one. They have created the Intact Center on Climate Adaptation. And the Intact Center is an applied research center with a national focus in the Faculty of Environment at the University of Waterloo. They work with the University of Waterloo and other organizations to foster innovative solutions to help reduce the physical, financial, and social impacts of extreme weather on Canadian communities. So, you know, I mean, everyone in the industry is very aware that climate change and weather are having an impact on those catastrophic exposures for sure.
Excellent. Thanks for adding that, Melissa. I would encourage anyone who does have a question to pop it in the question and answer the Q&A function at the bottom of Zoom. We do have a comment. Interesting presentation, good information. So thanks for that, Melissa.
Mm-hmm.
Okay, here's a good one. Now they're coming in. Awesome. So on a slightly different topic, could you shed any light on the process you go through when putting together an insurance renewal and the effects on when a strata goes to market through several brokers?
Oh, yes, that's always a fun discussion. So basically, most of the brokers, especially in a small city like Victoria or a small territory like Vancouver Island, we all have access to almost all of the same carriers. And generally, insurance companies will only quote to one broker at a time. So the first broker that gets a full submission into that insurer, they get the quote. So you have broker A, who maybe is the incumbent. So they're sending out to their regular markets, the ones they already have on risk for renewal terms. If they feel the need to shop the market, they'll go out to a couple of other insurance companies to get quotes to see if, if anyone's changed their prices or terms. And now if broker B comes in and submits to those same carriers, broker B isn't going to get a quote because broker A has already submitted to the insurance markets. Broker B may have a few markets that broker A doesn't have access to, so they could have a quote for part of the building, but they can't fill the full 100% because broker A has already utilized those markets. So we really see this as more of an issue with the very large buildings, because obviously you need multiple carriers on significant values. So when you're hitting, say, probably $40 million and up is when you might start to run into issues. Definitely in the 65 and plus $1 million values, we're going to run into issues when there's multiple brokers in the market. Because what could happen is not everyone could fill it. And then you're left, the strata is left with an incomplete quote or a not very competitive quote because the incumbent is only able to utilize the existing markets, and maybe some of those other markets that they would have gone to are already blocked. So they couldn't get a lower rate coming in. So, it's important to, I would say, speak with your property managers. They have a pretty good handle. We have a lot of discussions about this. So there's a pretty good handle on if it's something that you should go out to market on or not.
Excellent. On to the next. At what point would the insurance companies balk at insuring a building?
At what point? Well, I guess lots of claims. So if you have severity and frequency of claims, insurers don't like that. So you're generally either going to get very high rates with very high deductibles, or they're just going to decline outright. So that's the first one. Second one would be older buildings without updates. So like I mentioned in the presentation, poly B plumbing, aluminum wiring. If you don't have a depreciation report, there are very few carriers now that will accept submissions for a strata that doesn't have a depreciation report. They want to know that you're properly funded and that you're following the recommendations within the depreciation report. Obviously not exactly, because we know that they are just suggested replacements and timelines, but paying attention to them at a certain point and making sure that you are doing your regular maintenance. So where that's not happening, they're not going to offer up their capacity. Those would be your three main items: losses, age, and maintenance. Excellent,
thank you. You mentioned flood and earthquake maps. Where are they found? Is that something that a layperson has access to?
Possibly. I mean, if you were to Google a flood map, you might come up with something, but that's not necessarily going to be the one that the insurers are using. And the thing that makes it even more difficult is some insurers use one flood map and a different carrier will use a different flood map, and one says it's a high flood risk and the other one says it's not a high flood risk. So there's, basically it depends on what that insurer is using for their flood risk or earthquake. And that's where you get the difference in rates and deductibles on flood and earthquake coverage.
Okay. Should a strata get an appraisal done annually?
Yes. So at the very least, an appraisal update. So if you have your first appraisal done, and then I think it's every, I would say 3 to 5 years, the appraisal companies recommend that you get another full appraisal done, because what they're doing is just punching in for the updates and just going with whatever the average inflation rate is. So to get a full one redone, you're going to get more quantitative information.
Beautiful. From an insurance perspective, are there any advantages to an on-demand hot water system versus the traditional hot water tank?
Yes, the hot water on demand, they tend to leak less. They last a little longer. With the individual hot water tanks, insurers always ask, how old is the tank? When was it last replaced? Or what's the age of the oldest tank? And a lot of times, you know, council members or property managers can't answer that because technically that is the unit owner's responsibility. And you can't force everyone to change their water tanks or upgrade them, but it does make a difference. And that's why I had mentioned one of the mitigation points is if you can keep track of the age of hot water tanks and when they're replaced, and you know, just really encouraging owners to replace them before their warranty date. That's going to help prevent losses.
Great. How can you tell if your premium is being credited for good behavior, for keeping up with the depreciation report, replacing the roof, tracking the age of hot water tanks and heaters? As clients, we're just seeing the total premium. So how does a council member decipher that?
You can't really decipher that within what you're presented. That would be, excuse me, trust in your broker, trust in your property manager, that what is being offered is reflective of your building and all of that work that you're putting into it.
What general premium rate increases are you experiencing in recent renewals?
So we were anticipating in January, we were anticipating anywhere between 5 to 10% rate on top of inflation. What we've been seeing is actually a little less than that. I would say on average, there's probably about a 5% rate on top of inflation. So however much your building values have gone up, then there's rate on top of that. So a little less than we had originally anticipated, for the most part. If there's been claims, you know, a new claim this year, and maybe you haven't had claims for 5 years, well, then you're going to lose a little bit of that claims-free discount that's been applied, and you might see a 7 or 10% rate increase.
What is the best way for a strata to coordinate a change their renewal to align with maybe their fiscal year end?
So we do that quite often. Most of the time, you know, if it's, let's say, a 5-month renewal, we can do a short-term 5-month renewal, and that will get you in line with your fiscal year end. If it's maybe we're talking a 2-month difference or 3-month difference, sometimes we've been able to get the insurers to agree to do, you know, a 14 or 15-month policy instead of an annual policy. Not everyone will agree to that. It is a little more difficult in the hard market to get them to agree to longer terms, but where it's, you know, it's only 14, 15 months, most of the time we can get them to agree to it. So it's, you know, whatever works better for council, for your budgets, to do a short term or to do a little bit of a longer term to get them to align.
Great. How do you determine how much contents insurance you need on your unit?
Full disclosure, I'm not in personal lines. that would be a really good question for your personal lines broker. But having done it way back when, and again, having my own policy, take into consideration, because your contents are going to include obviously everything you own. So you want bedding, cutlery, furniture, electronics, clothing, artwork, all of your little day-to-day things, plus any improvements or betterments you've done in your unit. So if you've upgraded your flooring, or you've changed your cabinets or your faucets, or your electrical, your lights or something, you want to include that in your limits as well. And that would be all of your contents value. So most brokers should have a little pamphlet, like a checklist, and you can kind of go through and just take inventory of everything you have. It's a long process, but I do recommend it. It is worth it, because you really don't realize how much it would actually cost to replace all of those items, especially at today's rates, right? Your cabinet that you bought 5 years ago is probably 3 times the price now. Everything's gone up so much. So doing that inventory is definitely important. Then, of course, if you have jewelry over certain values, you want to schedule that separately, or bikes or artwork, you know, if you have real artwork that you want to schedule separately, that would be on top of. Oh, and just on that note, one thing to keep in mind, a lot of people don't think about, if you are moving into a brand new unit and you have, a lot of developers will offer an upgrade package. So certain, you know, you can pick and choose what elements you want upgraded. Those are considered improvements and betterments. So even though it's a, you know, brand new unit that you're moving into, any of those upgrades, you want to make sure you insure under your betterments and improvements.
Great point. Thanks, Melissa.
Mm-hmm.
In your experience, what are some of the issues that insurers care about and impact rates and deductibles, but stratas tend to put off or struggle to get owner approval to upgrade or change?
Plumbing would be a big one, and electrical. Those are 2 key items that insurers are pretty stickly about. They want to know if a building is 25 years or older, has the plumbing been upgraded, has the electrical been upgraded, and again, particularly if there's poly B or aluminum wiring. Obviously, the plumbing is very difficult to update when it's behind walls, and I mean, it's difficult. There's no question about it. But when that plumbing is constantly leaking and causing water damage, it becomes a big issue. So how do you get owners to approve those big budget items? It's just understanding, I guess, understanding the importance of it, understanding that when the losses occur, when they keep occurring, it may affect the ability to even get insurance for your strata. And that becomes a legal issue because the Strata Act requires that you have replacement cost coverage on the building.
Great. Just a comment, someone had noted that the CRD has a flood and earthquake map available. So if you are to Google, you may be able to find something. Would you be expected to replace all poly B plumbing before anything happens, or is it okay as long as you replace any cracked poly B plumbing with something else? Would strata unit owners be expected to replace all plumbing B if that is what was used when the building was built, for example, in 1994?
Right. So ideally, yes, the insurers would prefer that it is all replaced. Realistically, well, again, it depends on who your insurer is, because some won't even offer terms if there's poly B plumbing. But for the ones that do, as long as it's been inspected and what is it, the corners, because that's where the issues were with poly B is when the pipes were bent, it was wearing faster. So if those joists and corners are replaced, I think with copper fittings, they'll look a little more kindly on that. But in with the carriers that we use, where there is poly B, the ones who offer the coverage, their water deductibles are higher. So even if you've had no losses, you're looking at a minimum $50,000 water damage deductible if there's poly B. Did that answer all the questions within that question?
I think so. How often should we be advising owners to replace hot water tanks?
Whatever the hot water tank warranty is. So I think I want to say 8 to 10 years. Each tank will be different, but I think the average is 8 to 10 years.
Would employing a full-time building manager affect insurance premiums at all?
Not in the way that there's a set discount if they have a full-time building manager. When I've been advised that a building has a full-time building manager, I definitely let the insurers know that. So I think, you know, in terms of all of the information together, it certainly helps paint the strata in a better, more favorable light for sure.
Great. Have EV chargers in parkades impacted insurance at all?
Not as of yet. I think what's going to happen there is if the insurers start to see losses occurring, then they're gonna react. So they haven't been proactive yet. Although I did just send out an article to all the property managers this morning from the Whistler Fire Department about electric bikes and scooters and the fire hazard that they present. And it's just got tips about, you know, don't charge it overnight. Make sure it's not charging unattended. Never charge it in a child's room. Check your batteries. Make sure they're UL listed or, you know, whatever company tested and qualified. I don't know if you've seen that yet, Christy. I just sent it out this morning, so maybe it hasn't been distributed, but you'll get a copy of that.
Awesome. Yeah, there have definitely been some council discussions around those batteries and whether or not they are in fact a fire hazard. So it'll be good to get that in property managers' hands to distribute. Do commercial policies include guaranteed replacement cost in coverage or just pay out the amount of the appraisal?
So commercial generally is just replacement cost. There is some brokers have the extended replacement cost option. So that used to be in the good old soft market. It was on every policy for stratas. You would see the extended replacement cost where that would give you a 30% buffer over and above your replacement value. But with the hard market hitting, a lot of insurers are no longer offering that extension because basically that was an extra 30% capacity on every risk for no charge. We have a couple of carriers that do still offer it. Some have started charging for the difference and some don't charge. They'll only offer it where you have an annual appraisal update. So again, that's a plus to get those updates in. But generally, again, when you have the large building values where you have multiple carriers on, you won't see the extended replacement cost anymore because most of the subscribers that you have to bring on no longer offer it.
And then just a clarifying question. If the kitchen is original, it's insured by the Strata Corporation. If someone renovates their kitchen, it then becomes owner insured, correct?
Correct, yeah.
Excellent. Those are all of the submitted questions.
Great. Well, I feel terrible about bringing up the wrong presentation. I'm usually so careful to double check everything, and lo and behold, I picked the wrong one, but it was just
that's okay.
that we missed.
I think we hit all of the important pieces and gave everyone an opportunity. I'm just checking. Yes. So everyone seems super happy. Great information. Thank you. Not to worry. So the positive comments are flowing in, and I think we've addressed all the questions.
Well, excellent. And if anything does come up, feel free. You can email me directly. I don't want to put it out to email your PM, but definitely email me directly if you have any other questions, or give me a call. Feel free to do that as well. Yeah, and thank you. Thank you for your interest.
Thank you, Melissa. Really appreciate it. And thanks to everyone who attended. I don't know, Catherine, if you have any closing comments.
Sure. Yeah, I just have a couple. Again, thanks to everybody. Thanks for taking time out of your day. We did record this session and we will be sending out a link to the recording in the coming week. So you will receive that via email if you were registered. Feel free to share the link with other council members or other people you think would be interested in the information that Melissa shared today. We'll also be posting the recording to our YouTube channel. So you can always find it and the recordings of past sessions, lunch and learns, and academy sessions there on our YouTube channel. As I mentioned at the beginning, if you have any questions or comments, please complete the survey at the end of the session or feel free to reach out to me directly. And we will be working on new sessions for the fall. So we're gonna leave August alone because everybody's on vacation. But you'll see more information about what's coming up for the fall months in the coming months. And I think that's it for me. Thanks again for joining us and have a wonderful rest of your day.